Again, thank everybody for joining here. This should be a great conversation with Paul. My name is Michael Guy, publisher of Lead Lag Report. Joining me for the hour is Paul Goranson, CEO for Encore Energy. Paul, for those who are not familiar with who you are, talk about your background, how'd you get involved in the energy space, uranium, nuclear in particular, and what are you doing with Encore?
Sure. Well, first of all, I'm the CEO of Encore Energy Corp. I joined the company back in October of 2020. Just because I do work for represent a public company, I just have to say that anything I say may have forward-looking statements, and just take it as it is. But I got into the industry back in, I've been involved in the energy industry since the 80s. And I got in particularly into the uranium space back in 1987. I've been involved with it ever since, through ups and downs throughout the whole, the price cycles and everything else with the industry, principally in the United States.
How has the perception around uranium changed since you first got started in the 80s, right? Because you didn't have ESG back then as a talking point. You didn't have as much concern around climate change. Talk about the evolution of perception for a bit here.
Well, I started at the mid 80s, and as you know, we were coming off of the perception, and those of you who are old enough like I am can remember 3 Mile Island, and then in 86 we had the Chernobyl incident. So the public perception around those two incidents created a really negative outlook for nuclear. And I got into the industry because, frankly, it was the only one I had a paying job at the time. But as I started working in the industry, initially, particularly after I started realizing the clean energy benefits of nuclear power, and the fact that uranium is the way uranium is produced and mined and everything is a truly clean way of generating electricity. At least from my perspective, I've always been sold on the outlook of nuclear power. But as a result of the other incidents that occurred before, as you would expect, the investment in nuclear power really diminished quite a bit from the mid 80s all the way up until the late 90s, or actually early 2000s. And that was just a factor of lack of investment. And then, frankly, the perception that nuclear could be safe was always undermined by that. And plus, you have shows like The Simpsons and other things that kind of create this kind of bad, or not a bad, but just kind of a not representative impression or the safety record of nuclear. And it wasn't until the late 90s and early 2000s it became very recognized, at least particularly in the U.S., after the performance of the history of the nuclear reactors in France, et cetera, and Japan at that time, and the safety culture built around it, did it suddenly become, as the U.S. reactors started becoming more efficient in how they began to generate electricity, did it start becoming more of a viable industry. And then when long after that, we started talking about the nuclear renaissance because people recognized the clean energy aspects of nuclear. And that is what really kind of kicked off it wasn't a lot about climate change, but it was really about clean air. And the fact that there's a high energy density with respect to nuclear power, and the fact that it generated no emissions, particulates or even CO2 at that time. So that's kind of what the cycle has got us here. But it's been an industry I've been involved with. There were opportunities for me to lead the industry, and I kept coming back, staying in it, and always found upside to the opportunity.
All right, so I want to get a little bit more specific on the lack of investment point, because on a lot of these Twitter spaces, a lot of people in talking about the oil and gas space, as well as when it comes to nuclear, will use that term. But when you say lack of investment, first of all, what types of numbers are needed to get uranium nuclear up and running? And the source of those funds from an investment perspective, is that a combination of public and private? Is it primarily very large institutions? Talk about the specifics here as far as what that actually means, lack of investment.
Well, the lack of investment. So I'm going to retrace my steps back to the 80s, and then we'll fast forward to the 2005 Energy Policy Act. So in the 80s, after 3 Mile Island, we had extremely high interest rates. So there were several nuclear power plants that were actually started construction. And due to delays, because the Nuclear Regulatory Commission was taking too long, and I'm speaking strictly from a U.S. perspective, pardon that, and it was taking quite some time. And so the investment, that is, the money was coming principally from private, or the utility money was going into these nuclear reactors. And as price escalation started going up due to delays and changes in standards by the NRC, and then interest rates were hitting 20%. several nuclear power plants that were under construction or about to start construction, they basically were canceled. And in fact, in Colorado, there's a Fort St. Vrain nuclear reactor was going to go in, and now it's a natural gas power plant location. So there was a shift because of those economic factors and also the regulatory factors. And of course, that had a knock-on effect to the fuel cycle. Unlike oil and gas, the fuel, not too dissimilar, actually. The uranium is produced from the ground in a yellow cake form. It still has to go through a beneficiation or refining process to become fuel. We call it the fuel cycle, and the oil and gas side, we would call that, the refineries, et cetera. But so we're at a point where there's no investment, no nuclear power plants. In fact, plants are starting to be decommissioned because of various factors or shut down. And as a result, in the run-up to that buildup at the early 80s, the uranium industry worldwide had really picked up, started increasing production with the anticipation of long-term sales and the ability to supply those new reactors. Well, those new reactors didn't show up. So you had a glut of uranium that had to be basically drawn down over a period of time. And so that created a pretty long negative cycle in the in the late 80s into the early 90s that created that drawdown. Of course, then there was a few blips in between, but overall it was basically the industry had been saturated by fuel for a limited or capped out nuclear power program around the world. And fast forward to the early 2000s, particularly in the U.S., there was an Energy Policy Act of 2005 that created loan guarantees, because by this time, the cost of building the reactors were in the tens of billions of dollars or multiple billions of dollars, not tens of billions, but multiple billions of dollars. So $3 to $5 billion as compared to some number much lower in the 80s due to cost inflation and also a lack of expertise, because in that 20-year hiatus, all the skilled knowledge, the steel manufacturing for the reactors had all been shipped overseas. A lot of the technical skills and everything had basically been reduced as people exited the industry or was retrenchments. But 2005 was coupled with what we call the nuclear renaissance worldwide, where there was a recognition that nuclear was a good solution. In 2005, with the loan guarantees, we had several nuclear power companies intend to build new reactors, and in order to take advantage of the loan guarantees to build out these facilities. And then by a time, as you know, when it takes financial time to work through these decision-making processes, meanwhile, government policies continue in a certain direction. But by the time several of the utilities were ready to act on executing the construction of new nuclear power plants, Fukushima Daiichi happened. And as a result, most of the projects were canceled, and that created another lag again in the whole industry worldwide. As we hear about Germany shutting down nuclear reactors, and Belgium, and obviously what happened in Japan. And so that created the next down cycle. But for a while there was hope that we were going to be seeing a resurgence of nuclear energy, which means demand for fuel, which helps the whole uranium industry.
So that point about the sort of skill and knowledge, because the industry goes through these periods of nothingness for a while, is interesting. And I have to assume, as a CEO, that one of the big challenges for people in your position is finding the right kind of skilled labor. Now, you often hear that point that there's a shortage of quote unquote skilled labor in most industries, but I have to assume that it's much, much harder when it comes to anything energy related.
It is, whether it's oil and gas or nuclear. But I would say on the nuclear side, because my highest familiarity is obviously with the uranium mining side, but I know on the nuclear side, they're also having trouble recruiting new people to come work in the industry as their workforces begin to retire. And on our side, we've had such a long, effectively since 2011, 2012, our industry, the uranium industry worldwide, has basically been in a slowdown mode, or actually, in the U.S., almost no production at all in the recent years. To characterize that in the uranium industry in the U.S., in the 1980s, we had 23,000 workers in the industry. That's mill workers, miners, geologists, engineers, technicians, safety professionals, et cetera. As of at the end of 2021, we were down to around 206. And that's a pretty low level to rebuild from. Fortunately, there's still people out there, and that's one of the reasons why I'm working where I am now is because there's a really strong bench strength with the company that helps you get started rebuilding the business. But I would say that overall, where we've seen the greatest losses, obviously, is we've lost a generation in the industry. And we have to rebuild that. And we have to make sure that one of the things that everybody has, whether it's skilled workers or technical positions like engineers and geologists and even accountants for that matter, they have to have some kind of certainty that they're going to have a career. And so everything that's why we weren't able to keep people in the industry when everything was gone. When the price of uranium hit record lows, et cetera, it became very difficult to maintain people, but we're rebuilding it. I think the whole industry is beginning to rebuild and recover some of the people, but it's been slower than I'd say overall for everybody. It's been a little slower than they would like, but certainly not something that's going to be an insurmountable obstacle over a period of time.
Yeah, and you, presumably for that comfort in terms of having a career path there, you need to have long-lasting government policies, irrespective of what party is in power, right, to ensure that. So let's talk about some of these policy shifts that are starting to take place. I think Japan's the one that's gotten the most headline attention, but talk about from your vantage point how different parts of the world are starting to change their tune on the role of nuclear in particular.
Yes. So nuclear's kind of got a unique space. It's still relatively, it's only a small portion of the world's electric generation capacity. It's roughly 10%. And in the US, it's 20% of the generating capacity right now. But what people began to realize, particularly as we start to focus on climate change and greenhouse gases, that nuclear provides a very high density source of generation, but it also produces that generation with minimal emissions. Even if we want to take the full cycle all the way back to mining, the emissions and the environmental impacts are relatively small for a really significant large amount of terawatts of power. And so that suddenly, as government policy started shifting to get to a clean energy or move away from fossil fuels, it became very clear that the relying on renewables solely to do that wasn't going to be something that helps you get there faster. And it became very clear looking at countries like France and even what China is doing in their strategy to drive for this big growth in energy, they needed nuclear power to do that. And that created quite a few policy. What I would say is that realization created some policy changes, of which the net of what we've seen most recently is the EU taxonomy for financing, labeling nuclear power along with natural gas as a transitional green fuel, which allows investment from clean energy funds and ESG funds to occur. And also on the policy side in Japan, there's a realization they need their nuclear power plants coming. They won't meet their carbon emission goals as they intended, and they needed to recover their nuclear power program, at least a significant portion of it, to be able to have reliable and inexpensive, or not inexpensive, but reliable energy to offset not only their power cost, their energy costs, but also to meet their climate goals. But it's taken a while for Japan. As you know, the whole Fukushima disaster it impacted the whole culture over there, and it's taken a while for that for the population and the public to see that there's benefits for the nuclear program. In the U.S., nuclear has always been kind of the all of above solution to power generation and energy independence, et cetera. But it wasn't until the Biden administration came into power in the U.S. that you saw a real significant move and commitment to go to clean energy, and also the first time there's been any real government acknowledgement of the importance of nuclear power to do that. And that was a big change, and it created basically a bipartisan and the congressional world a bipartisan support for nuclear power, which you hadn't seen prior to 3 Mile Island or in the 70s. Basically, a support for it. And one of the reasons that several of the outcomes is that in the most recent, bipartisan infrastructure law, there's a credit to preserve economically distressed power plants. As you know, with power grid in the U.S., wholesale power pricing until recently, because of inexpensive natural gas, made it very difficult for facilities like nuclear power plants to compete on to win auctions into the merchant power grids. And so we were constantly hearing about more and more power reactor shutdowns. Well, with Congress providing this grant money to preserve these reactors, we hear news about extensions and also the possibility of a plant that was scheduled to shut down in 2025, that is Diablo Canyon in California. Those policy changes like that are allowing the support, public support to maintain these power plants. And then most recently in the Inflation Reduction Act, there was a provision for a nuclear production tax credit to allow nuclear power plants, whether they're regulated or or merchant plants, to be able to compete head-to-head with subsidized renewables as well as with natural gas and provide a tax credit to keep them rolling. And I think the total, I don't remember what the total amount is on that tax credit, but it's a fairly significant amount of money over a period of time. And so now, once that all got passed into law, now we're hearing about lifetime extensions. We're hearing about restarts of, at least restart of one nuclear power plant in Michigan that's been set for decommissioning, and also power uprates. And from my perspective as a fuel supplier, power uprates, life extensions are great for us because that means we're seeing more demand, because for every watt of power you produce out of a nuclear power plant, there's a certain amount of uranium that goes into that. And also life extensions, when we hadn't had, when plants were expected to retire, that came out of the fuel supply demand curve. And now they're back in for an extended period of time, changing all the demand scenarios that we have been basically banking on for the last several years. And so it's created this dramatic change. And then something as small as the debate in Germany about retaining their nuclear power plants is insignificant. Regardless of how that goes, it certainly has been a reset. And then we have the UK government announcing basically building 8 new reactors to supply power on a pretty aggressive path to build those power plants. So we see a lot of changes. And of course, the Chinese haven't taken their foot off the gas building power plants. And we're hearing more and more about how the Japanese are committing to adding 9 new reactors, et cetera, into their fold. All that creates a new demand scenario that didn't exist a year ago.
Is it safe to say that you need to really have Germany be the biggest advocate for the entire Eurozone to try to have some kind of unified push towards nuclear? I'm trying to get at the question of what is it that you need to have sort of total buy-in?
Well, I'm not an expert on the EU or Germany's place, and I know that they carry quite a bit of political clout within the EU, and they do lead on a lot of things. But they basically made a political commitment to discontinue their nuclear power program. But I think that we're going to see that the French continue to take their demand, their leadership in nuclear power and generating electricity for the entire Eurozone is going to create some benefits for that. I think that the words coming out of Germany has certainly changed. At least the messaging out of Germany has with respect to nuclear power. Not so much that it needs to be eliminated altogether. It's now just focused strictly on Germany and the fact they already started their pathway to decommission their nuclear power plants from a decision they made 11 years ago. And so I see that that Germany is going to have a constant need for reliable baseload energy to support their industries. And if one looks at the way power is distributed in Europe, I would say that they would continue to be a significant part of that demand for the reactors are continuing to operate in other countries within the EU.
Okay, now one of the things that you often still hear, even though I think a lot of the supply chain disruptions are abating, is that there's still this dynamic where there's scarcity of being able to get things in pretty much most industries, and it's no different when it comes to uranium. Talk through to the audience here the supply-demand dynamics and how these supply chain disruptions are factoring into uranium and then ultimately nuclear, and then an extension of that, which is that how long you think these supply dynamics, as it relates to uranium in particular, will remain in play.
Well, I'll start. I can only really speak from our company's experience and what we've done, but others have messaged the same thing, is that, first of all, key pieces of equipment and material have been in stress supply. Costs have gone up for those materials, as well as the ability to obtain them in a reasonable amount of time. I'll characterize it this way, is that, and I'll go off my experience no more than 5 years ago, is that just-in-time inventory is no longer an option for any key items. You're just not going to find it on the shelf any longer. So that's changed the strategy. And so from our perspective is that what it's forced us to do is, one, is expect longer lead times, which we built into our plans. Others are doing the same thing. And also we've looked for alternative suppliers. And in reality, the most secure way to do it is not, since just-in-time inventory is no longer an opportunity for us, we've secured our critical material in advance of our need. And that's helped us keep our pace going and also keep our cost fixed and manageable. And I think others are doing the same as well. I've heard a similar messaging coming out of a company, out of Cameco, which is the large Canadian mining company, et cetera. And so what we've had to do is basically just change the way we do business in order to anticipate potential supply chain issues. I can't say it's not bulletproof. I mean, we've had some things. There's been some materials have been held up longer than others, but we've built enough flex into our plan to allow us to do that, to manage that. And as far as it continuing, I do feel like it's starting to wane. The constraints, they're still there. There's always going to be constraints for the time being. And as we go through different things, 2 weeks ago, we were worried about a railroad strike and bring a lot of stuff to a halt. And a lot of materials we get run on rail. And then there's obviously fewer truckers that are available these days than there were 5-6 years ago or prior to the pandemic. That creates delays on transport. But I do think that we're starting to see a little easing of it. Materials are getting a little bit easier. We're starting to see easing on supply timing and vendor requirements to place orders and to receive them on a timely basis. We're starting to see easing there. I wouldn't say it's 100% back to the way it was, but we're starting to see a move back off of these extremely tight and tight supply chains and basically uncertainty around deliveries. But I wouldn't say we're probably just starting to move off those extremes back the other way. Similar to what we've seen with cost increases, et cetera. We're seeing cost increases slow down dramatically. I think they've peaked up, but they haven't come down. They just slowed down significantly over what we were experiencing a few months ago. And which, we expect, as prices go up, demand goes down, and it creates that slowdown there. So I think overall, it's going to be something that the industry will manage pretty well. And as we begin to increase demand overall throughout the entire industry, our suppliers will become much more reliable. Keep in mind is that the production lines for a lot of the materials, which are very specific to our business, have been sitting idle for 5 to 6 years. And when you're trying to compete where there's in a peak demand period for that supply to restore those production lines, it takes a bit to work through it. But once that demand shows up and is steady, what I'm experiencing is that the production supply chains are starting to move away from the high uncertainty we had before.
Yeah, reset the room for everybody here. So everyone, please make sure you follow Paul here on Twitter. So Paul, you mentioned lead times. I always make it a point that in a world of instant gratification, people underestimate how long things take to factor into the economy, right? So this narrative of, well, let's just restart some of these idle nuclear plants. People seem to think that that's a dynamic that happens tomorrow. Talk through a little bit what those lead times tend to look at when it comes to restarting a nuclear plant, creating a nuclear plant, and when people actually start to see the benefits of it.
Well, since I'm not directly in the nuclear power side of it, it's going to be hard for me to be able to describe what they do and what they're saying. But I would say that, if I had to put a general statement, it's the speed at which things were built in the Western world 20 years ago is going to be slower now, because those lead times aren't just factors of materials, they're also factors of getting people and getting key people to do the work in those places. And so that's when I factor in, when I look at my planning and everything, it's not just on getting material, but it's where I need people. I need to make sure I have enough time to find the right people and get them trained. And that's the key part of it. And from a uranium production side of it, we have obviously, when you do any kind of work, you have to work within a safe environment. So it's key to find the right people and to do decent and make sure that they're doing work safely. So that means that, and in addition, you're taking even things such as contractors, it takes them a little longer to get up to speed than they would have 15 years ago when they could go from job to job and retain a workforce. So I would say that the lead time is expanded for on the people scale, in addition to just building in the lead time to get materials. But that's the main thing I see as being the key part of it. And that's something that gets lost in a lot of the narrative that, that people, you hear discussions about price movement and there'll be demand coming in. As demand increases, the supply is going to respond. I don't think we're at that point any longer. I think that supply will respond first with the right market signals, but also secondly, it's not going to respond instantaneously. A lot of these facilities have, particularly some of the conventional mines, require quite a bit of labor. And when you retrench people over a period of time, those people no longer are coming back to the industry because they found some other career path or other job to go on. So now you got to bring in a new staff or a portion of your staff, and they have to be trained. And that takes time. If you want the right people, if you want to do it correctly, it takes time to do it right. And so you just can't flip a switch tomorrow to turn on a new facility. And then there's another factor. We talked about lack of investment at the beginning of the show. And when you look at it from the mining side, but even every aspect from mining all the way through enrichment, all the way up to nuclear generation, when you're basically depleting, you're allowing your resources to deplete. And so, because you're not investing into growth, there's an old saying in the oil field that when you stop drilling, you're going out of business. And if you look at the drilling numbers, both on a global basis as well as specifically in the US, you'll see that over the last, I would say, since Fukushima, there's been a dramatic drop off in exploration and development drilling to be able to build resources that in-ground resources that would feed these mines that would eventually fuel these reactors. And that's another point that is out there. The longer that you diminish your existing resources, and this is the case today, it makes it very hard to immediately flip the switch on over fresh resources to restart because you've depleted all your fresh resources. Now you got to go bring in new resources that still have to be fully characterized and developed. And that's where you see, from my perspective in the industry, that's where I see the biggest, the other factor that when I hear people say, well, with demand, there's going to be more uranium, probably it's not going to come as fast as they think, because not only has there been, a loss of people and restarting the supply chains, but also there's been a degradation of resources to be able to feed that demand. And so it's going to take time for all this to fill in to be able to get to even close to a steady state.
Right. And a part of that obviously is where where uranium tends to be located and mined, right, and produced. So for the audience here, Paul, talk about the geographic aspects of getting uranium and some of the geopolitical risks that happen if you don't have it focused on the US.
That's a good point. So uranium itself is the most common heavy metal in the world. It's ubiquitous. It's all the way down in the core of the earth, et cetera. So you have to narrow it down to where there's economic concentrations, and those are principally focused in North America and also Kazakhstan and Africa. And so that creates so we know those economic resources are. They're also in the United States and Canada. And that creates another geopolitical risk, is because outside of North America, US and Canada, all the other significant production regions of uranium are in countries with state-owned companies. And so they're part of a national program. And even the material uranium being produced out of Africa is principally being produced for Chinese-owned companies. So it's just not going into the market. It's been sequestered by these governments. And then we get to the geopolitical side, particularly with today's geopolitical news. There's Kazakhstan, who is the largest producer in the world, but they've been very public about the ability to get uranium to their customers outside of Kazakhstan, because their entire infrastructure goes in two directions right now, either through the port of St. Petersburg, Russia, or into China. And that creates a challenge for them, because obviously, with what's going on in Ukraine, relying on Russia is creating more issues than we can probably have time to talk about on this show. But it's forcing them to look for alternative paths, which aren't going to come easy and are not going to come cheaply. So suddenly that reliable supplier coming out of Central Asia has now had its supply chain crimped coming to the West. It's not shut off, but it's like it's just been crimped or squeezed at the moment. For the moment, there's no, but so that brings us to where the U.S. is a good example of where the supply chain has created situation issues. And that is the fact that since Fukushima, we've shifted our demand, our supply from North America focused and Eurozone, OECD countries to being almost completely reliant on production coming out of Central Asia and through via the Port of St. and out of Russia, enrichment coming out of Russia, to the point where it equaled almost 60% of uranium purchased last year was sourced through the Port of St. Petersburg. And that's created a supply shock in the Western world. Hasn't manifested itself really in the uranium space, other than to basically sustain uranium prices that are in the near $50 a pound at the moment. But what it's done is it's created a supply shock for enrichment and conversion, because in the West we allowed all those services to be decommissioned or decline because the Russians were providing almost exclusively 40% of the world's demand out of Russia. And by selling it for cheaper than what the Western suppliers could to sell for, because they're a government-owned company, they can do that. It created a situation where we basically now, if the country, I'm going to speak from the United States, wants to wean itself off of Russian supplies, it's going to take a transformation in the domestic fuel cycle to make that happen, because we need the most secure supply comes out of Australia, Canada, and the United States. And so we need to the U.S. has got to find a way to get that from drums of yellow cake to cylinders of enriched uranium. And that's led, so that supply chain issue has obviously resulted in spikes in conversion services and enrichment services as utilities scramble to get those secured before they began looking to find the fuel that would go through those services, that is uranium. But the U.S. government's realized its vulnerability. And in fact, in the latest supplemental funding request for Ukraine aid, there's also a $1.5 billion request for the Department of Energy to rebuild our nuclear fuel cycle by buying low-enriched uranium and high-assay low-enriched uranium to create a market demand that would secure that demand, those market conditions for the enrichers, converters, and ultimately uranium producers to increase capacity to fill the U.S. demand, the overall U.S. demand to supply our reactors. And that's a big change. It's something we hadn't expected to see. I mean, it was brought up in 2020 with the Nuclear Fuel Working Group that President Trump initiated. But I would say that the Biden administration has taken that kind of sort of strategy and turned it into policy and really driving it, because we have extreme vulnerability in the United States on our supply chain, but it's just not us, it's Europe as well. And eventually, once Japan begins to buy uranium, they're really running off of existing inventories, also to supply Japan. And so we have to build a domestic secure fuel cycle, and U.S. uranium mining is a key part of that. And there's some other national security issues that I could go on for another hour about that could bring about additional demand out of the U.S. government. But we'll focus on the current policies today. And it's a sea change over where we were a couple of years ago. And it's what's really triggered that sea change is the geopolitical issues going on overseas, particularly between Russia and Ukraine.
Is that creating a more competitive environment, meaning there are new entrants to uranium mining that are entering the field because some are seeing that this is a longer term trend that needs to be primarily located within our borders? The competition aspect of this space to me is intriguing to think through, because presumably it's very capital intensive and very land specific, right? Very location specific. Mm-hmm. So how does the landscape for competition look for other uranium producers entering?
Well, as I said, uranium is a pretty common material. And I'll speak from a U.S. perspective. There's very large resources that are known in the U.S. The key is which ones are accessible at an economic rate. And then the competition is going to depend on their ability to execute. And having it is capital intensive, but, you can get the capital, but if you can't execute and utilize that capital effectively, you're not going to be competitive. And so what we see is that you've got a very small industry. I would like to say that small industry is representative of the fact that the energy intensity of uranium itself creates the ability to leverage off even a small industry. But it's got to grow. And we do expect more competition to appear because as prices begin to strengthen as it's expected, then we expect more people to coming into the market. There's, as we know, with any commodity out there, whether it's oil, speaking from an energy perspective, there's a whole lot of oil wells that can be produced, but not all of them are economic until you get to certain price points. Well, uranium is the same way. There has to be a return on the investment. And some companies have what I would call low-cost properties in the U.S. that are easily accessible, well identified, and there's others that have to be developed. And one of the things is that the most significant uranium resource in the United States is outside of which is principally in situ recovery right now, is also the conventional side, and there's a limited amount ability to mill uranium ore in the U.S. And so there has to be some investment there as well. But the in situ side, which is where we don't have uranium mills to produce uranium, to produce it, we do it through a process that people can go. There's plenty of information. Go to, we got a website you can go to and learn more about in situ recovery that provides an opportunity to do low cost production. But not all ore bodies in the U.S. are amenable to that. Just like not all ore bodies are amenable to conventional mining or open pit. It all depends on the cost and the opportunity. So I do see as all boats begin to float with increased demand, as utilities, the nuclear utilities, which are our principal customers, look to source from secure supply chains in the U.S. We're already starting to see that shift already as more companies are announcing utility contracts to deliver to the utilities over a period of time, which didn't exist prior. And we've seen kind of a knock-on effect that's occurred as a result of the geopolitical situation, which had been building for a bit prior to February 24th, 2022, that have been building and already creating a wake-up call within the nuclear industry. And I think that it just basically, now we're at a point where it cements it in place.
So that point about the ROI and sort of the price of uranium, I think, is worth maybe exploring a little bit further, because a lot of people in the oil and gas space will make the case that some of these drillers will be wildly profitable, for a long, long time, as long as oil, let's say, averages 80, as an example. When it comes to the uranium space, where are we in that profitability in terms of the price of uranium and the production side? Because to your point, just like everything else, the harder it is to get certain types of raw material, the higher the raw material needs to be for it to be justified to go through the development process and extraction process. Where are we in terms of uranium's price relative to the cost of production currently?
Yeah, so the clearing price for production is still, I would say, relatively, a good point is there's a industry trade weekly that comes out, and basically every month they post what's called production price index. And that production price, they do a survey of all the costs going into what it takes to produce a pound of uranium, but it provides a minimum incentive price to clear new production. And a year ago, when they first announced that clearing price was around $30 a pound. Now that price is around $52 a pound. And that's the minimum clearing price to see new production going into play. It's not all production sites. So there's quite a bit of work that's available publicly that shows that right now, roughly about 50% of the world's production is profitable at that $52 per pound rate. But that leaves the other 50% that builds into that number that's going to be some higher. So some will clear, some of the production will clear at 50, some will clear at 60, some will clear at 70, and they'll move up until you're starting to clear other types of pricing or price requirements to bring up new production. And what you see is most uranium suppliers prefer to have kind of a blend of not just spot market, but also long-term contracts to be able to secure pricing at those clearing prices that they need. So, I would say that, based on some of the public announcements from several of our competitors and us itself, we've been announcing term contracts. And, obviously if one were to take and look at today's pricing and everything else and kind of get an idea what forward pricing looks like, which is all publicly available through these price surveys like UXC Consulting and Trade Tech, you'll see that obviously that the clearing price has moved up to some number above 50. And so obviously the production curve, the production price index is probably showing is basically showing a lagging indicator of where the price is needed to start clearing more production. We've got a fixed amount that's been committed. but it's not the entire demand that's going to be there. So the demand's going to have to accept higher clearing prices to be able to start to to secure that supply. But it's going to take time as supply chains and particularly on the enrichment and conversion side begin to stabilize, and the uncertainty that's in those sectors is cleared up. We'll start to see more movement in the uranium market at that point.
Okay, and actually that's a good term to use, uncertainty, right? Because that relates to volatility, which I always say is not fear, but rather doubt. Compared to other sources of energy, and I think I know the answer, but I haven't actually looked at this myself, but what does the volatility profile of uranium look like compared to natural gas, compared to oil? And the reason I think that matters is because if you have an energy source which is less likely to have positive or negative surprises, that probably lends itself to a better long-term investment profile, if that makes sense.
Yeah, it does. So uranium, I would say, is less volatile than natural gas or oil. And the reason I say that is the number of trades that occur in a week is relatively low. You may get 2 to 3 trades, maybe 4 trades a week of uranium that are setting the price, whereas you get hundreds or thousands in oil and natural gas on a weekly basis. And so that creates such situations where, in the uranium space, it stays stagnant and it'll move up or sometimes fall off depending on who the bid and ask is for that material. But the movements aren't that dramatic. It's a big when the uranium price moves a dollar, it's considered a big move by some folks. And I remember back when the price of uranium was $18 a pound, I talked to price reporters wanting to know why what caused the uranium price to move 10 cents. And so again, we're such a small niche industry. The market itself is very opaque. There's not what I would call a real robust futures side of it. And the pricing's relying on basically what I would consider off-market transactions, where the final price may or may not be reflective of what the spot market indicators are pricing. So it's just a bit different. It's nowhere near as volatile, and it really does reflect the supply demand. So as demand begins to increase, supply, in order to respond to that demand, is going to have to see higher prices. That's been pretty clear by messaging from a lot of the producers, and to reach those clearing prices, because as you know, with inflation and everything else, everything moves up. Clearing prices, everything move up. So the pricing market's going to have to reflect that to draw in that new production. But not a single new pound has been produced in the world. New production has not come on, even with higher prices where they're at today. So that's fairly indicative that higher prices are going to be needed to see a dramatic change. But that also goes back to the lack of volatility in the market.
Right. And correct me if I'm wrong, but it's not like there's a strategic petroleum reserve equivalent when it comes to uranium, or one that you could even envision having an impact, right? So a lot of I think oil and gas, the oil investors in particular, were of the belief that the SPR would not dramatically impact the price of oil and push it lower, but it ultimately did, and that created a whole degree of pain, you can argue, for the last 2-3 months, let's say, in the space. You wouldn't have that kind of dynamic when it comes to uranium.
No, because the government already did that back in the 90s and the early 2000s. They had a significant inventory of uranium, and they basically pushed it in the market without a cost basis and drove the price, helped contribute to the drawdown in the price in the early 2000s or the early 2010s. And so they've already gone through all that strategic, quote unquote, strategic reserve. Wasn't listed as a strategic reserve. In fact, it was released for non-strategic because it's no longer considered strategic. Uranium's treated quite a bit differently than petroleum. And the U.S., just to give you an example, the U.S. was selling 10 to 12 million pounds of uranium a year when the demand was only 45 or 46 million pounds a year. Contrast that to the releases from the strategic petroleum reserve, which only represents a fraction, effectively 1 or 2 days worth of demand for the U.S. And so but all that material is already flushed into the market back then and has either been consumed or is an inventory ready to be consumed. So I don't see that happening. I can't promise anything, but it doesn't seem that that's going to be a factor it's going to be there like it was in the past.
So, and that wasn't refilled since then, or
No. In fact, under the 2020 Energy Act, there was an appropriation to start building a strategic uranium reserve. And they allotted only 75 million pounds for it, $75 million for that, which doesn't represent a big amount of uranium. But the intent was to run up to a $1.5 billion program over a period of 10 years to start acquiring uranium and building a strategic reserve for both national security and for energy security reasons. Subsequently, that hasn't really moved much more than that $75 million appropriation. Recently, the Department of Energy put out a request for proposals for U.S. producers to supply them with uranium, and it's a total of like 1 million pounds of uranium total that they would be buying at the highest level. And it doesn't seem like that's going to be continuing much after that.
Yeah, that's interesting. I'd never heard of that as a talking point for the uranium space. Okay, that's at least to me that's interesting. Again, everybody here, please make sure you follow Paul Goranson here on Twitter. Paul, final question on my end, and then we'll wrap up. What do you think people get wrong the most when it comes to uranium, right? Because I named the space the battle for uranium because it's a perception battle, and I saw you put a couple of tweets making this point that now environmentalists are getting on the nuclear bandwagon. But is there some other narrative that you think people have completely wrong when you look at the data? It may not necessarily have to do with that. It could be around safety, but just talk through that a bit.
There's quite a few. It's kind of a loaded question almost, but in general, there's a lot of things that people get right about nuclear being safe and clean and base load. What gets lost is that it's unreliable, it's expensive, and it's just cost prohibitive, and you can't do anything with the nuclear waste. And that's always the question that comes up. And then when we get in mining, can you do it environmentally friendly, et cetera? And I believe the answer is yes on that point, but that's a perception we have to get through, particularly at the local scale. But on a policy scale, larger policy, one of the questions that comes up all the time when you talk about nuclear power is about the nuclear waste and what should happen to it, because it's a problem, but it's not a problem technically, or it's a policy problem. And for example, if one were to take all the nuclear waste from reactors and pile it up into a football field, it'd be stacked, I think, 15 feet high. Well, since the 50s, that's the amount of nuclear waste we're talking about. And all that's sitting in cask and spread out, basically stored at the various nuclear current and past operating nuclear power plants until we come up with a central repository. And that was designed and committed to. And then, of course, now politics have created that uncertainty again. But it's always something that comes up because it's, the lack of any kind of pathway for nuclear waste, ultimate storage for nuclear waste is always one that comes up regardless of what conversation you're having. And the reality is that it's solvable. The technical ability, the technical locations, and the technical ability to make it happen exists today. And it's not cost prohibitive. It's just a matter of getting the policy right. And a good example is Sweden and France have solved that problem. They have deep repositories. So they have a place for their nuclear waste to go to for long-term storage. And I use the phrase storage because everybody's strategy is built around, at some point, we're going to be developing a technology where we can economically recover the remaining 90% of the energy that's in that spent fuel. But it's going to take some education, but also it's going to take some major policy, and particularly in the U.S., just to address that, simply because it's not a technical problem, it's strictly a policy problem. And all the nuclear spent fuel is being stored currently at the power plants and safely and effectively, but it's dispersed to 104 locations instead of one repository. And that's why the question keeps coming up all the time.
Yeah, super, super interesting. Again, everybody here, please make sure you follow Paul. Paul, really do appreciate your hour here with us. I think it was very much worthwhile. And everybody enjoy the rest of your day. Thank you, everybody. Thank you, Paul.